Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for coming by today. Let's get into it right away. We have a lot to talk about. Grab your pen and paper, and also stay glued to the monitor for this stream. There's so much to go over. I'm going to try to go as fast as I can. And remember, these streams are available exclusively to Bookmap Discord Trader Lab participants. There's no cost to become part of the Trader Lab community. You can access these webinars, 60 PDFs of structured trades that you will see me sharing every day here in the stream, as well as the Trader Lab community. And there is no cost. There's a link in the bottom of YouTube if you're visiting. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's get into the higher time frame right away. Okay, you guys remember, we had an excess low put in the day before yesterday. Based on the excess and closing up on the high, we were and the target for this day was 61.40. I think it was 48 or 40, something like that, 48.50. That was the high of the day. Our next target was 66.25. And those of you who've been following the stream, I've been posting these. This is Investor RT. It is my higher time frame chart, and it exports levels to Bookmap, what makes it really nice. So, and it's a high tier product. So let's take a look what happens. So this is the excess low. And there's another piece to this. Let's go a little further. Now this, well, let me just go back and make sure I got everything. Yeah, this right here, 33-ish, 32, is a high volume node. That's a retail price. It's an important location. We went below it, took out the longs. Remember how the market works. The market goes up to go down. Weak hands are there. Sell stops there, sell stops in this trend day up. The market goes down to go up. The market goes up to go down. And if you're in Trader Lab, you'll get an understanding of what's called market mechanics. Now we hit our target. Now I'm going to show you something interesting. Keep following. This is yesterday. Now this is a regular old-fashioned market profile. Remember, our target was up here. Now, I don't have the numbers on here. I just want you to see structure because this is called structured trading. The auction is a story, and we can see the perception of value or shall we say valuation of a product in the distribution of volume. What does this tell us? If we come back to a level that was previously too high that we left, the nature of the market is come back and check it. Well, if it's too high, we might reject it and then go back to the other side. What else? Now let's get down a little more granular. This level right here, you'll notice it looks the same as that. It is a high volume node. This is where most of the volume was done yesterday. Well, we checked this price. If you go to the store and the price is too high, you might leave the store. And then here was the high volume. Well, if the price is too high, you might leave the store. So this is our close and our settlement is up here. And what did we do? Well, it's a little hard to see here, but basically the participants might underline be saying this is too high. Now I'm going to take you to ETH. Actually, let me show you what's going on right now. Then we'll go to ETH. So what did we do? Well, now, this is the open, and this is where our first shorts took place. Now, I'm going to show you the ETH, and also, I'm going to show you something else. Remember that 48 level? So, too high, too high. And I draw a profile over these days. What I want to do is I want to see the volume distribution. Well, what happened? And I just showed you this on the regular profile. We rejected this. I'm not paying that. Get out of here. And we leave. And we close under this distribution. That is saying potentially, and I'm always going to say potentially because that's every moment in this business, this is too high. Well, if I reject it, then I know I have an outside level here and I have a level here. So if I open, I can check this level, and if it's now too high, and I know that is too high, and maybe this is too high, I want to go short. Why do I want to go short? Because the market goes up to go down. The market goes down to go up. The market goes up to go down. And if I come out of here, this is a consolidation. What happens when you break out of consolidations? What do they call it? The Acapulco cliff dive. You ever been to Acapulco? I've been there a couple times. And I can't believe these guys jump off a cliff down a thin ravine. It's unbelievable. You think trading is difficult? Try doing that for a living. So 61.18 was the excess low. All the longs in this consolidation have their stops here. Well, let's again talk about what we know. If this is too high and that is too high, and we can get under here, and even if we rotate around, ultimately and potentially, and not a recommendation, we'll see over here. Why? Because that is too high, and this is the last area that was too low. And the way the auction works is it's a pricing mechanism. So if we found too high, what do you think? Think about it. This is how the auction works. And this is what we do in TraderLab. Now I'm going to take you down to the next level. This is the ETH. Let's look at the ETH. What is this? Let me just move this a little bit down so you can see it. See if something looks familiar. We rotate too high, too low, too high, too low. Retail. If it's too high, we leave it. Then we start rotating again. Too high, too low, retail. So what does that tell me? Now let me bring you back. This is so important that you understand how the market works. Too high, too low, retail. I'm not paying that. Too high, too low, retail. I'm not paying that. I'm not paying that. I'm not paying that. I am not paying that. And it's not me, it's them. So now, let's go a little further. We have ETH. This is the last auction. What's too high? What's too low? What's retail? And we rejected this. Too high. This sets up shorts only for me. And I can't even begin to tell you how long in the TraderLab. All this is posted in the TraderLab before RTH open. A discussion of how to potentially trade this. And they're not trade recommendations. Now, let me take you back here one moment. So what do I know? This is too high in the ETH. This is the last auction. This is the low volume node where we separate auctions. And if this is too high and I fall out of what's called the distribution, now I know I might have an outside edge. It is right there on the price map. Now I'm ready to go into the RTH. All this is done before the RTH open. It's called a trade plan. And if you're in TraderLab, you hopefully will develop a trade plan. So now I'm going into the open. This is all done before the RTH open. This is a trade plan. I need to understand what happened and where's the fuel? Where's the stops? It's below me. If the market is selling off and I see in the last auction that this is too high, and there's a level, I'm going to be looking for what's called mean reversion. Mean reversion is a context. So let's look at it. Let's define this together. Let's say maybe now the trend has changed. We found excess based on everything I just showed you. If we found an excess high, what happens to the longs that are in this market and that are long from under that excess low that I showed you? They are all on the hit parade. So my job is to get short. And it's not ever a recommendation because we're all going to take stops. Everybody. And by the way, you got to experience stops a bit differently. Besides the emotional pain, because you want approval, and we're all wired certain ways, and we are wired to avoid risk and create certainty, which is in this business doesn't exist. So you're going to have your emotions taking control and hijacking your ability to actually perform. This is a performance business. You need to be able to perform. Your fear is going to interrupt your desire and ability to actually operate in the environment. You have to understand we're in a gaming business. We're not in a predictive business. So the idea of confirmation and all that stuff, you can take that and leave it somewhere else. And if you can't handle randomness, you're in the wrong business because it's 100% random. So you need to train your mind to disconnect from the emotional stimulus. We still feel it, by the way. It's what you do. So let's look. RTH open, and what I'm looking for is shorts. So, and there's two things you need to keep in mind. If in the ETH, our outside edge is here, where's the retail price in the most recent auction? The highest volume in the ETH is here. It's called the overnight volume point of control. I'm going to throw a couple statistics at you just to give you a little nausea. We're opening, and you have to vet these for yourself, past performance, not indicative future results. And I'm only spending a moment. We're opening lower inside of yesterday's range. And that has nothing to do with what we already know about the rejection and the fact that the market can potentially abuse the current longs. We have over a 90% probability of taking out either the ETH high or low. We have an 85% probability of taking out the previous high or low. We have an 83% probability of getting to the overnight volume point of control, which sets me up. If I get an outside edge, I'm going for this. Does that make sense? I have some of these are not going to happen. Let's see. About a 60% probability of taking out the first hour's low. And I have, see if I got anything else that's worth talking about here. No, that's enough to get us going. We don't have time. So I'm only on the short side all day. Other traders in Trader Lab are going to trade long. Others are going to trade long and short. We have counter trend traders, we have trend traders, and we have everything in between. But the idea of the trade plan is to find what you relate to psychologically. For me, let me just say this. For developing traders, I should say, it's one, you want to align with the developing side. You also do not necessarily want to trade the open because it's an isolated environment. You have no structure typically on the open. You are really trading the most recent structure, which is this. So when I come up here, right here, and I'm coming up in here, I'm looking before I ever get to the RTH open. Let me come back and try to see if I can see where. Let me just try to find this up here. If I can find it for you. Yeah, here. I have sellers here. So this is still ETH. Now this is RTH open. And I know my outside edge is up here. So when the market opens, right here, I have a sell trigger. And this is before RTH open. So I have a level. I have my ETH mid, which I did not give you the statistics. Shame on me. I'm going to give it to you. It has an 83% probability. So I have 83% probability of getting here. I have about an 82%-ish probability of getting there. Past performance not indicative of future results. This is what I know. That's it. Let's look. So RTH open, 8:30 Central Time, my time. Where do I go? I got resistance here. I have my ETH mid up here, where I had my sellers, icebergs, exhaustion, and micro high volume. So right in here is my area. So let's look at it. Now in the Trader Lab, I caution traders, and I do this all the time, not to rush in and not to respond to FOMO. What you need to determine and understand in the real world of trading is that it rotates. And if you have FOMO, you're on your way out of the business. It's much more important to manage your emotional state and not think that there's only one trade going to come by for the whole day, because that's what amateurs do in this business. And it's very hard not to do it. And the reason is the emotional triggers. Oh, I don't want to miss it and all that. That's not what professional career traders do. They understand what other traders do. And they understand what average retail traders do. Average retail traders have a huge failure rate. Don't do what they do if you want to actually create a sustainable business. I'm not insensitive to it. We've all done it. But if you're still doing it, you got to ask yourself, are you getting paid for that behavior? Or are you kind of taking yourself out of the business? Because that's what the result will be, in my opinion. Unless, of course, you're exceptional and you're going to not be part of that over 90% probability of failure as a retail trader. You can always be the exception. I think we all think we will be the exception. But if you're doing what other traders do, well, you can figure it out. So right here, right before the RTH open, I see stops. I see absorption. This is absorption. How do I know? I got aggressors, and what happened? My sellers are below my aggressors. Let's look at the behavior. Here's a sweep. The sweep sets up the short. It's a piece. It's part of order flow. So I see my sweep. I've got my excess here. Now this is called developing volume point of control. I'm very early in the session, and I consider this a somewhat aggressive trade because we could certainly come up here. And what I decided before the market opened was, if I see a short, I'm going for this. If I take a short and get stopped out, I'm getting short again up here. That's called trade plan, not predicting, anticipating behavior. I anticipate it'll come up here, and I anticipate it'll come back here. What is going to happen first? So I'm looking for a trigger. I know what happened here. I know what happened there, and I have a sweep. This is setting up my short right here. When the market goes up and I see a sweep, the potential is to counter rotate. Now, the word potential is very important in this. Let's watch. This is the first trade. Watch. Sweep. Trigger. Short. Look into scale here. Let's see what happens. That's the scale. Okay. Risk neutral. Now let's watch. Sweep. Reversal. Watch. VPOC migration. This sets up a structured trade in Trader Lab called VWAP to VPOC. We are in a directional context, which means, subject to your plan, or at least I'll tell you about mine, and I'm not saying it's a good one. I'm just saying it's the one I use. I trade with the dominant side. So that means no longs unless I have a trigger. If I get a long trigger, I cover my trade, and then I look to put it out again in what's called mean reversion. So I'm going to be trading shorts only and then rotational trades for continuation. Let's see how those work. And again, this is just one way to slice and dice it. So the first short's here. First target is here. Well, and let me go a little further. Remember, 82% probability, right? ETH low, over 90% probability. So my first trade is going here, okay? So that's like kind of like punt. You know, you start, it's the kickoff. Pull back here, structured trade and Trader Lab. What's happening here? If the volume is migrating down, it is suggesting, and this is language, that this is too high, maybe. So I mark it, and I made these terms up when I started doing this. Nobody was doing it this way, at least that I knew. I called it a variable high volume node. It's the same experience as I showed you at the top of the stream. If a price is too high, we're going to leave it. Now we can also come back and visit it, just like I showed you at the top of the stream in the higher time frames. Well, if this is too expensive, just like in the higher time frame, and now the retail price is here, what is the language of the market? It is saying, and this is a foreign language, I don't use indicators, I got to read the language. This is too high. Now we can still come back like we did in the higher time frame and check it, but if the VWAP and the mid are here, and I've seen what looks like a failure, and let me add another little piece, this is double distribution. What is that? I'm not paying that. And then there's urgency. The urgency creates what's called a low volume node. That is this little divider. So I'm going to put a little label here. It's the same as that, except now it's in the developing RTH time frame. Just follow the yellow brick road. Now, remember, this is trading. We all take stops. We all take trades, and they don't work. And that's the overhead and cost of production. Heck of a thing that you actually have to pay bills when you own a business, isn't it? So remember, short to there, target, 82% probability, counter rotation to mid and VWAP. Now, what happened here? Let's go take a look at something. Where's my outside edge of this? It is right there at the low volume node. Follow this as the auction. Sellers were here, and you're saying, I see a green bubble. The bubble's delta. That's the aggressor. Now, what is so important about aggressors? Does that mean you get long? How about this? Does it mean if we don't continue and we come back to where the sellers took control and the buyers were here and they got thrown under the Mercedes, then what is this? Isn't this resistance? And the low volume node is there and the buyer's exhaust. It sets up a short. And where are we trying to go? Back to here. So short from here to here, short from here to here, Trader Lab. Now what? Short from here to wherever. Overnight low is the target. Structured trading, Trader Lab. You can learn this. I believe if anyone comes to the Trader Lab and they do the work, that they can build out a trade plan. The goal of trading is not to catch the whole thing. How do you know where it's going to counter rotate? How about this idea? Nobody knows. But what do we know? We know yesterday's low has stops. Then what do we know? And it's all on the price map. The excess low has stops, and we have the potential to test around 14. All of this is posted in Trader Lab. I don't call trades. I mean, what do you need me to do that for? You don't want to take my stops. And this is the first hour low. And you'll see we have over a 90% probability of taking this out. Past performance not indicative of future results. If we do take it out, remember the price map. Where's our target? 88. Where'd it come from? Got to take you back. Why? Because that's the auction. Too high, excess low. This was retail. stops under there, stops under there, we're under there. Now, headed for this. Not a recommendation, but we have the IB low. That is our next statistically based target. So it's only shorts. You guys have questions, please post them. I hope you're getting something out of this. Yeah, it's CMJ. By the way, guys, we are, well, I have to show you something if you're visiting the Trader Lab. This is the Trader Lab chat, and you're all welcome. Now, here's what I want to show you. Talking about plans also. So this is what is going on in Trader Lab. Now, a lot of this is posted pre-open. And there's a lot of, let's come all the way back if I can get this. What time is it? 9, wow. So you can see how active I am. Now, I don't call trades, but I will tell you that I do help traders prepare, and I do when I can, because I'm a full-time trader also, in spite of all this. So I use and this is really the key to this whole thing. There's a hierarchy of process. And what this is all about is process, understanding a process so you can participate. So, and this started here, I don't know, what was that, 7 a.m. Good morning, traders. Currently, we're rejecting yesterday's upside target, and we are balancing out. So far, I've seen selling on any upside row. So this is what's before the market opens, okay? And there's these charts that I showed you. They're all posted in here. And it is a community of like-minded traders that have come together to leverage their collective experience. So there's a lot happening, and it goes on and on and on. And you're all welcome. And there's a lot more. A library of webinars so you can learn the process and see it under many different configurations. And you're all welcome. So that's all I can tell you about it. And there's a link in the bottom of YouTube if you want to join a serious community of like-minded traders. It doesn't matter how long you've been trading or what your methodology is. It does not matter. The goal of the Trader Lab is to help traders understand the business that they're trying to be in and to differentiate your outcome from most other retail traders. That's why I agreed to do it. I've been trading 45 years, and all that means is I've had more time to go down more dark, dead-end alleys than you have. That's all it means. So you might benefit from that. Yesterday's low, what's under there? Stops. So this is short, 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 short. Now, let's keep watching. There's more trades coming. How do you get into a trade in a downtrend and you're feeling FOMO and losing your mind? Well, let's look at this over here. What is this telling us? I'm not paying that. Are you crazy? Are you nuts? Forget about it. We're out of here. That creates the low volume. It's that rip. So the market is rejecting these prices. Well, what do we think of this? And you'll notice we pause. That's a consolidation, isn't it? Chop, 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 chop. And 32, 33 was a big level, right? Well, if it's now too high, where are we going? Well, the stops are under here. They're easy picking. And then where? 18. So if we know we have a target of 18, maybe, then we just want to keep selling counter rotations. Now, let's try to see where we can get into this thing. Well, if we come back up here, that's an outside edge. If we sell off and we have a low volume zone, in other words, we're all out of here. We're all in the Maseratis, and we're speeding away from this price. We're not paying that. You got to be nuts. This thing is overpriced. And remember, the market goes up to go down. So why is it going down? I know we're all bullish, but as day traders, we trade the participant behavior, not our opinions. They are the truth, not our opinions. I always say proudly, I'm clueless. And the clueless is not to become myopic and to rule out what's right in front of me. Once we get under yesterday's low and we take these stops, then we have to see what happens here. Do we come back inside or do we continue because we have more stops at 18? So for me, all of these are setting up outside in rotational mean reversion. So this is a short for me, not necessarily for you, but it is for me. What am I actually trading? This. Going for that. So as long as I have targets and fuel below, I'm going to use counter rotations. And what am I going to lean against, you're going to ask me? I can look right here and right there. Because right here, there was a little pause. And right there, I had my buyer. And right there is my outside edge. So right here against there. Now, this is trading microstructure. It is advanced to be able to actuate in a timely fashion. And I have liquidity. I think I posted this. I really don't remember. I do post trades. I do post screenshots. I don't call trades. That doesn't do you any good. So here's the microstructure. Now, this is advanced because a lot of traders won't recognize this. What's important about this? Yesterday's low. So we have the possibility to check into yesterday's range. If we can't recover in here, then there. So I took a short here. And this was another area to observe. And these are all posted in TraderLab, this and this, because we could come outside and then counter rotate. Let's see what it does. There's our counter rotation. Okay? Now, no precision. Part of the joy of trading. This is a high time frame location. I'm going to show it to you real quick so you know kind of how this fits. It's right there. 6109.10. So in a higher time frame, basically too high retail, too low, big rotation, higher time frame. If I get below here, that sets up this because this is the net. So how does this thing work? It moves from area to area. That's the auction. So the possibility then is if that's too high, come back here. If this is now too high, where's the stops? There and there, down here. If this becomes too low, I can come back here or I come here. That's what I know. And if I get here, that's enough. We'll talk after that. Can you guys see how the auction might work? Now, where are we coming? Let's come back. Where are we coming? The low of the excess. What might happen up here? We want to observe it. And then I'm going to look if you have questions. Please post them. And if you're in YouTube, now I have a sweep. What do I have? I have an outside edge. I am checking the excess low. I have a sweep. Watch. This is a triggering structure. And this might be a bit advanced. I get it. And that's okay. If it's not your trade, you don't take it. You just go, that's interesting. Why did that happen? Let me take a screenshot. Let me come back tonight or over the weekend, and I'm going to replay this, or I'm going to examine the order flow in here. What happened here? And it doesn't mean I'm not going to take a stop right here, because that can happen at any moment, at any time. Let's look at the behavior. So, for me, there's my sweep, there's my break, that's my trigger, there's my test, teeth chattering, My stop goes 3 ticks. This is just me. It's not a recommendation. Over the high of the trigger. I don't get taken out. And then my job is to get risk neutral. Where might I get risk neutral? Let's take a look. Where was the last auction that was too low? It's here and there. Let's look at them. This is how I slice and dice. It's called trading in fractals. Scale. Scratch. You see it? Questions while we're at it. How we doing, guys? Let's see. Stoic troglodyte? Interesting. Thank you for the 8:24 a.m. post on Discord. It helped me be on the short side. Oh, you're welcome. You're going to buy some eggs today? Oh. Gabriel, thank you. Truman, do you use excess low and high the same as market profile, excess low and high? Yes. Any excess in the market is typically blowing one side out, and then the opposite side is taking advantage, and you get the squeeze of the other side. So, what's interesting about the that higher time frame chart that we were talking about, when we came and took this out, the stops under these longs, and down into this trend day, that created an excess. So you got all these shorts in here, and then the buyers came for it here and squeezed those shorts. So that became the excess low. Up here, we had the same condition. We squeezed all the shorts out, tested, found too high, and then closed under this consolidation. That was excess for me. So then it was back here, there, and then maybe there. And if we get out there, all the energy in here. So it's a breakout really of this consolidation. And then, then wherever, but theoretically, notice what's up there, what's down here. So for me, I have a high probability of taking out the first hour's low. And unless things dramatically change, I only have shorts. But explain excess? Yes. I hope that explains excess. You only see numbers on my chart? I don't understand. So this is the scale, and then scratch or trade management. Now, I don't discuss trade management too much in the stream because it's really based on you, not me, you. You got to figure that out. Now, if I come out here and I take the stops out, I'm going to have to look at where else might I come. This is still my outside edge. It's out here. So and for me, the trend is down. So all I have is what's called mean reversion, outside in. Tobias, you only see numbers? I'm not sure what you're referring to. Be more specific. So let's look at these. So the way the auction tends to work, and this is very messy because it's trendy. So you get this kind of stuff, So I have to look out here because of the taper. So I want to trade the taper, and I know that this has over 90% probability of getting taken out sometime during the day. Now, 90% is a good possibility. So for me, there's two things I want to be thinking about. Counter rotations to squeeze shorts, which is fine, and then getting realigned for the continuation trades towards this probability or this statistic, and 88 down below if we take this out. You notice the liquidity is still sitting at 6,100 at this point. So that's why it's shorts. So let's watch. All right, I'm coming outside. What's important here? Yesterday's low. So I have volume here. Let's market. Now I have no clue. So I look at this and I go clueless because I am. So I have VWAP, and currently the volume point of control is above me. That is balance. Got to find it. It's up here. So I know I can come back here, but chances are I'm going to get stuck up in here someplace. So this is a mean revert. This, I should say, is a mean reversion trade, right? I think it was that one. Yeah. This is the mean reversion. And all I'm doing is coming to another location to look for to come back down. This is the auction. So let's see the behavior. Now the liquidity starts stacking. Let's start looking at the pieces. I'm at an outside edge and I'm at yesterday's low. And while I can't remember, in the Trader Lab chat, I believe I posted this, but I can't remember. You guys can come to chat. You can look at all of it. So I have my liquidity. I have my sweep, I think. Let me just look. Yes, I have my sweep. I am looking now for my short. I come back to mid. I come back to VWAP. And I have my IB stat. Let's not forget. This is a short. There's my sweep. There's my mid. There's my VWAP. Now, what I'm looking to do is come back down. Where was it too low? The last place was here. High volume. And why is this more important than some of these other locations? Because it's the last place where the sellers got absorbed and I got my buyers. And let's remember shopping. So I have a couple possibilities. If I take short there, I can scale here, or I can scale here, or I can just go for this. All of that is up to you. It's not up to me. VPOC migration. I got to label it. Let me get back here. It's part of my process. Now, when I say my process, all I'm doing is tracking the value. What do the participants who are shoppers, what are they willing to pay? And when you go to the store, the retail price has high volume, doesn't it? You pay retail, buyers and sellers agree to do business. Well, this is a store for S&Ps. And if this price is too high and now they're doing business down here, while we might come back and check this price like we do in all time frames and fractals, maybe it's too high. Maybe this is saying now this is the new retail price, and maybe we're going to try to come down and find too low. Maybe. And let's see. This is your short. So if you took a short here, now this is something you have to decide. I got short here. I know there's stops at the mid and the VWAP. I saw the liquidity here. And for me, I'm just saying me, I move my stop behind the liquidity. And don't forget, I'm leaning against yesterday's low, so I wanted to be out here. If that's not appropriate for you, you could wait for this. Where's the level? It's coming out of here. So I have resistance. So in here with the liquidity is also a short. So I took it here. I don't have a problem with that. If it doesn't fit, now here's the thing you got to know. If you take a short here, you must always look left to see what happened the last time we were here. I was leaning against this, so you understand why I took it here. And just like everybody else, I see this and I go, gee, you should have waited. Now, the next question is, how would you know? How about this? You can't. So the lunatic, who I call Hyde, Jekyll and Hyde, if you don't know the story, Google it. Hyde's a lunatic. And Hyde is the critical self. I could have got that. I should have done this. Well, sure. Except in trading, it's random and you can't predict anything. So when you get the voice in your head that criticizes you, and that criticism turns and generates FOMO, You got to stop it. You got to break your response to it. The lunatic has no clue. I mean it. So when you hear the voice in your head, you've got to recognize it for what it truly is. Lunatic. And the other part of the lunatic is risk avoidance. It's a reptilian brain. It's a judgmental self. And the judgmental self in a lunatic, or the reptilian brain, the fear that you, and the uncertainty, which is what you've been trying to solve for all these years, if you've been in the business years, or if you're new, you're still trying to solve for it, which is certainty and confirmation. It does not exist here. So you can't solve for something that doesn't exist. Now, I'm not saying you have to accept that, but I'm going to suggest you might consider it. So this is the optimum location for the short, and again, it can fail like everything else. VPOC migration. Two possibilities here. Push off, you get steamrolled, or break low. We break low. This, for me, puts the icing on the cake for the short, and down we go. Now, where was the last place it was too low? It's right here. So this is my scale, and now hold it. Let's watch the trade. Clueless. VPOC migration. I'm not paying that. By the way, I got to label these things. You notice I do this every day in the stream. And if you want, I really suggest the last 3 streams are a sequence of what you're seeing here. In other words, not only the Trader Lab or auction market theory, this process, but how it plays out day after day and how it builds on itself. If you're in the Trader Lab, you would be only on the short side unless you're a counter trend trader, and that's fine too. And for developing traders, you got to pick a side. If you're going to be a counter trend trader and you're not profitable trading with the dominant side when you can recognize it, that's not a good recipe. You need to get proficient at understanding context. And the thing about context, like the current behavior, it changes. So if we're in a directional move down, a trend, how do you trade a trend? You need a counter rotation, and that sets up something called outside-in trading or mean reversion. If you're in Trader Lab, you'd only be trading with the trend, and you'd be trading outside in. Now, if it changes, then you either go to park or that's it. You're done. Or if the trend is going to become up, you would then consider longs. But suppose the trend is down and all we're doing is squeezing out the current shorts. Remember, the market goes up to go down and goes down to go up. So you'd be risk neutral on this one and you'd be hanging out and you're managing the trade. This is as deep as this gets. What's it going to do? How about this? No clue. Do you need to know? Nope. Now, we have a change in behavior right here. Let's look at it. This is our variable high volume node. This is now a variable high volume node. Too high, current price. What happens if I break above the current price? Maybe it's too low. Really? Well, what's too high? This. So how might I look at this? Resistance, support. And here's the real key to this. This is also Trader Lab. Now, if this is the retail price, what might happen? If it's still too high, you get this, and off we go. And we're looking for, going to zero. But what happens if the behavior changes and it goes this way? Then I know that I have resistance up here. And if I come back, so this is also a viable short, maybe, or not. There's a trigger, by the way. Now, it's kind of out in space. You'd have to be using order flow. Not necessarily something you need to do. Where did I just test? That low, the excess low. So I'm outside of that excess day. This is a Trader Lab structured trade if it's vetted by you or it's nothing. Now, where's support, you're going to ask me? There. Why? too low. If you take this trade, you must be thinking about that and that. And preferably you get risk neutral here, but that's support. If you clear this on, on to the 90 percentile target. What else do we notice? I'm going to add another little piece into the mix. Order flow. This guy cancels and moves his order. Do you think if you see minus 399 here and plus 399 that it's the same guy lifting? This is order flow. You can learn this. So now this guy is looking to cover or buy maybe here. And where's support? There. So let's watch. See the behavior. What do you do now? Well, what does your plan tell you to do? For me, the teeth chatter. And if I was in this trade, I'm either just have my stop at break even, or here, when I read the order flow, and it's at a location, remember? Location, location, location. It's cover or scratch, And again, trade management is an individual process. So let's look at this thing. I'm going to show you this. You might like this. What is this? Let's come back. Let's look at the structure here. Now remember, this was the last short, okay? Now, when you do this, sellers are here, buyers are here, buyers are there, order flow. Trigger, sellers are below the buyers. What does that tell us? Look at the icebergs. They were absorbed. How do we know? We don't until the sellers are here. Then this is too high. This is my trigger. Let me show you. And I'll get rid of these lines, but I just want you to see how this can help you learn language of the market. So this is a consolidation. Now I'm getting a lot of lines going here, so I'm going to get rid of them in a minute. Here's the high volume. You can see it there. So this is the same as that retail. The store or the auction takes place in all fractals and timeframes. So what I'm doing is I'm looking at the participant behavior in fractals. You think of them as timeframes. I don't, because time doesn't regulate this. This whole behavior can happen in 2 seconds. So time frame doesn't apply here, because I'm not trying to force the market into a box of time. We created time. The participant interaction is what creates pricing and valuation. So that's not regulated by the clock. Just a thought. So the sellers take over here. The buyers were there, right? The sellers are here. Sellers take control, and there's my trigger. So how do I get into a short? I got a couple ways to do it. I can look to short in here, and the stop has to be above here, 3 ticks. Just watch it. So where do we come? Let's just look at behavior. I'm just showing you structure, not trying to impress you. I'm just showing you the auction. Nobody can predict anything, okay? So get over it. Doesn't exist. I don't know why I can't move this. Oh, there you go. So where's our resistance? It's at the volume. It's right there. See it? And I get a sweep. So this is a short to there. This retracement is a short to there. And then you're still looking to fall out the bottom. Down to the liquidity. Remember? He lifted. Where might we go? Support, liquidity, target, then hold. Or trade management when you get this. It's all subject to your trade plan. Notice where we come back. See if this isn't interesting. Let me open it up and move it over. So I don't use indicators. So what am I doing? Good question. What I am doing is reading the auction. This is a language. Now, I always talk about indicators, and I probably sound like somebody who doesn't like them. I built trading system and grew up on indicators. When I started trading in 1980, they were like a new thing. So, very exciting. And for those of you who are new, and I repeat certain things. I learned market profile from Peter Stottlemyre in mid 1980s. And I shared an office with George Lane, who created stochastics, which you know is a popular oscillator. And this is before a lot of the other things evolved. We didn't have Keltner channel. There was a lot of stuff that didn't exist, and it was mostly Wells Wilder back then. So I thought the Holy Grail showed up. So I spent half my life, it seemed, with oscillators and then trading systems, because I was managing funds across asset classes. And back in the day, we didn't day trade. It was swing trading and positioning, trend following. So that's what I did. So I did that for many years. But as the technology evolved, and then we got domes, and actually you could place an order other than picking up the phone and calling your guy on the floor, it became more, there was more ability to then start the day trade. So anyway, notice the behavior, notice the test. Okay, let's go a little further. Notice the behavior. So what do we have? Short, short, and this is resistance. What happens? Now, I like to use a level once, and the reason is there's stops above this swing. Now, when I pull back to this level, this is a good short for me. This is a good short. So these are all shorts for me. And I'm hitting this, remember? I come down here, I do not get this, and now I come back. What's above these swings? Stops, stops. And where's an outside edge? It's up here. Are we current? Question, guys. Sorry, apologies, but we're current now. And let me see where our next trade might show up. I want to point that out before I take a look. Well, we got to look out here again. Not a recommendation. This is a key level, 31, 32. And a variable high volume node is here. The mid is here. These are levels. What else is at the mid? Stops. So you always have to look left and write this down. Think like a retail trader. Don't act like one. How we doing, guys? How we doing in YouTube? How we doing in YouTube? Guys, please give a like, a thumb up. If you're interested in the Bookmap Discord Trader Lab community, it is a no-cost community of like-minded traders that have come together to leverage their collective experience and do better. It takes a community to do the work, to do the research, to create structured trades that you can vet, to support you, to help you understand the actual business you're in. It's not what you think it is. It really isn't. I know what we all think it is. We think it's time frames and indicators. That's what we think. I don't know why we think that. It's because that's what everybody else does. I guess it must be right. And everybody has winning trades. That's another problem. I know. When I said that the other day, I said, one of the worst things that can happen to traders is to have a winning trade. And I'm telling you, everybody probably kind of rolled their eyes in their head. But what I'm really saying is the market is random and everybody has winning trades. The thing is that you can have gamblers have winning hands, but they over time, the casinos extract the dollars from the gamblers. It doesn't matter that they win. What matters is the casinos pay the gamblers overhead and cost of production. Also, can afford to give you the cocktails and the ticket to the buffet. Maybe if you're a roller, fly you in, comp your hotel, and give you tickets to Adele. How can they afford to do that? Well, they only play games that have a statistical edge. They have no control over the cards coming out of the deck or how the gamblers play the cards, right? They're in a 100% random environment, with one exception. They only play games that have an edge that favors the house. That's how this business works. It's not a business of certainty and prediction, which is what we all seek because of our reptilian brain. You're going to hear something very consistent here in the Trader Lab. It's consistent because the business needs to be consistent. The behavior of these participants and the squeezes of the rotations. In other words, when the market goes down, it goes up. When the market goes up, it can go down and it can change. What is the market doing? The market goes up to go down. The market goes down to go up. The market goes up to go down. And the market can go down to go up. And the market can go up to go down. Do you see anything different in the shorter time frame? The market can go down to go up. The market can go up to go down. What's different? That's called trading in fractals. Hope you're getting something out of this. Greenway, the thing about stops and icebergs, you know what's intimidating? Anything's intimidating that you're not familiar with. What these are assets, insight, understanding who's active. When I see stops coming out, that's good news, as long as it's not mine. And often it is. We all take stops. We all pay bills. Wouldn't you like to have a business of your own where you didn't ever have to pay a bill? Where there was only one side to the ledger, profit? Well, you want to be in the business of trading, you're going to have to pay some bills. So what we do is we get paid for taking risk. And we also pay when we take risk. So when we take risk, we should probably make an attempt to only do it just like the casinos do, and only do it where we have a statistical edge. When you come to Trader Lab, you're going to learn about what this is. What is a trade plan? A trade plan, I spend in the morning, basically, and I suggest everybody in the Trader Lab, you have a trade plan. What's a trade plan? You start with the auction at the higher time frame. The auction is up. But what happened yesterday? We got our upside target. Could it have kept going? Of course. But what did it do? It didn't. It rejected it. What does that do? See, this is why you got to be looking. All right. What is that set up for today? Well, depending on the ETH auction, which is the last auction, do we continue to selling or do we go and take, what do we do? Well, it looked nasty. Shorts only. What about now? How about park? Unless you're a counter trend trader, which you could be if you're advanced. But how many trades do you need a day to trade these rotations? And what might that do? You don't need a lot of trades. You're not an hourly worker. You're not here for action. And if that's what you're doing, you're seeking a dopamine fix, and you're also on your way out of the business, in my opinion. So if you want to be in the business, it's really a strategic and a performance endeavor. Strategic in the sense of knowing there's stops above this swing, there's stops above this swing. You would know that in Trader Lab. And then where's the stops coming up? It's going to be out in here someplace. So we have to look left because that's where the last sellers were. And when you look left, you're going to see where the swings are. And I think it was either here and here. So always look left because you don't want to step in front of, for example, here, there's shorts in this leg, okay? Where's the stops? Well, they're above here. Where's resistance? It's there. Where did I come back? There. Where's more stops now? There. and there. If I don't look left, I'm asking for trouble. Where's the stops now in this leg? Here. So there and there. Shorts are here. Shorts are here. Stops are here. Let's see what happens. You see what I mean? So I can't predict anything, part of the joy of randomness. But I understand how the market works. I understand that if there's shorts from here, essentially, and shorts in these rotations, and they're starting to get squeezed, if you're sitting short, what are you doing? Would you be covering? Or would you just be sitting there being passive, watching your open trade equity disappear? What would you do? So this was the last level that was too high. And what else is there? Stops. So for me, since I don't trade the long side, at least in my Trader Lab conversation, what I do doesn't really matter. I'm only talking structured trade and trader development here. I do things that I wouldn't encourage anybody to do, but I have trades I've, shall we say, developed over many years. But what I share in the Trader Lab is really kind of advanced stuff. And there's 60 PDFs of these things. Now, don't forget, we're looking for a squeeze here. This is what these look like. You can download these. They're available to everyone in the Trader Lab. And these are not, this is not a trading course. It's not what I do. These are just 60 PDFs of ideas. A lot of traders were asking me, this is like 2020, 2021. What are you doing? I go, well, I know what I do, And then traders and I guess it got kind of interesting for a lot of traders. And then Bookmap asked me if I would mind streaming. So I'll give it a shot. So I've never done anything like that before. So where's our fuel? It's up here. Where's our outside edge? It's out here. Where's my next trade? Good question. So I'm going to be looking out here, and I'm not recommending a trade because the fact it comes to a location, it's not mechanical. I'm going to be looking at the auction as we come up here. So my reference is this is an outside edge. You'll notice that we fell out of here, so I know this might be too high, and I can come out here, and it sets up a condition called mean reversion, which means I can come all the way back here and then out the bottom. That's my trade, and I'm sticking to it until the condition changes. Questions, guys? How you doing in YouTube? Everybody conscious? I heard some heads hitting their keyboards, so I want to make sure you're all okay. Why no VWAP to VPOC? Stops and counter trend. Let's look at VWAP to VPOC. I'm getting a great question here. Why not VWAP to VPOC? Well, I don't see a trigger. I see support right here. Now, this might be a trigger happening out here, but this is funky, If I don't get a location and I really want the stops, the way I kind of operate, and I don't know where these swings are, I'm losing them here. We have a VHVN there. Oh, I didn't mark that one there. And I got one here. Oh, I missed that one. Well, shame on me. Right there is a location. I did not mark this, so say la guerre. This is what happens. I don't multitask well. I miss things. When I'm actually concentrating, I don't miss too much. Here, let me explain what this is to you. VPOC migration, and I did a specific webinar on it. It's in the library in the Trader Lab. VPOC migration is a unique process of the auction to define a fair price. And it moves around based on this shopping experience. So this is too low. This is too low. This is too high. Now, and the liquidity there, so right? So now let's come back. This was actually by VWAP to VPOC right here, we were talking about, and this, okay? So let's just watch the structure. Go down, that's all wonderful, having a great time. Now what? Come back. Where's my structure? Well, it's there, which is the same, here, and there. So these are all areas to observe for reactions. Now, if it's not your trade, just no trade. It's no big deal. You know, what I always suggest in Trader Lab is that traders narrate. So this is a potential location. It's a high volume area. This can be a short, but it's very aggressive, and we're trying to come here. So if you take this trade, and I missed it, so hey, you know, say la guerre. That's the location. And what you're trying to do with this is you're trying to find an outside edge. And it could be up here also. It could be out here. It can be up here. Nobody knows. So, but this did not happen. Now, and there's no trigger. I don't see a trigger. So the question about why not VWAP to VPOC, FinTen, do you see why not? How we doing in YouTube? Hope you guys are getting something out of this. There's a sequence of webinars, and if you go on YouTube or you come to the Bookmap Discord Trader Lab community, but if you just go to bookmap.com or search Tom B and Trader Lab, Bookmap Tom B on YouTube, you're going to find a slew of my streams that are recorded there. If you go and watch the last 3 or 4, you're going to see a sequential process of narrating and navigating the market, and a in-depth explanation, as much as I can in the limited time, of how this thing works. How does the market work? Do you know how the market works? I'm going to bet you don't, because with indicators, you don't need to understand that. You're spending all your time on trying to get this indicator or group of indicators and time frames to do the work, to translate. And of course, they work at times. That's just like everything else. The gamblers win. Well, the indicators work. And then they don't. And the problem with indicators, they're not sensitive to context. They just look at rotations, you know. Now, you might know the context is down. I think that's kind of obvious. But what are you doing about it? Are you letting your indicator or your divergence say get short here, get short here, get short here? What's the right location? Where's the outside edge? Where is it? I don't think your indicator can do that for you. It'll just get you chopped up taking a lot of trades. And then, even though you have some winning trades, everybody does, over time, you're moving the cart in the wrong direction. That's because you never had to learn to understand market mechanics. And you're depending on indicators to solve that for you. But they don't have that capacity, in my opinion. So you have to do it, and you have to be willing to learn something that's going to take some time. And that is actually how to trade, in my opinion. I'm not saying you won't have winning trades, but I think what most traders do is something you should learn from but not emulate. Unless, of course, you're a consistently profitable trader and you have sustainability. Then by all means, bring it to the Trader Lab and share it with us. Nobody has a monopoly, you know. But most retail traders are doing the same thing, and it doesn't tend to turn out so good. Which is why I agreed to do the stream and create Trader Lab. I can tell you that the time I spent trying to learn to trade is years. And when I started, there was know off-floor traders. All my friends were floor traders. And at the time, technical analysis was aggressively looked down upon as voodoo. I mean, it's hard to imagine, but that's how it was looked at because it was pretty novel in a lot of ways early on. And then as like I had CQG early on, and they were like the leader at the time, you know, with multiple time frames. You know, you could get down to 5 minutes and, you know, 10, 50, all that kind of stuff. And you could have your whatever, ADX, DMI, whatever you're doing, you know, and all the Wells Wilder stuff. And so we had a lot of things to play with and a lot of time got spent. And most retail traders just spend their potential development in time frames and indicators and indicator mixes trying to create that certainty that we crave because of our reptilian brain that wants to avoid risk and the saber-toothed tiger. Your brain and your mind cannot your reptilian brain cannot differentiate between a saber-toothed tiger and this. It experiences it the same way and it triggers your fear. So you are directed by your emotional state and your primal wiring to seek certainty and confirmation. It's very logical, but we never think about it. But that sets you on a path that is not actually aligned with the business you're trying to be in. I hope you'll just consider that. You don't have to take my word for it, obviously, but you should do a little soul searching. Outside edges up here, but we can come out to any of these edges. So again, where are the stops? They're going to be up in here. So what do you do if you're in Trader Lab? Work on your crochet. Or, you know, you're more aggressive and you're into scalpateria. I don't scalp. What I found, and I have been a high volume trader in the past. I used to trade just NQ. And I will say I was very aggressive. And I could go up to 100 trades a day. Very, very scalpy, very rotational. And it was during the dot-com bust. You know, so we're talking 2000, somewhere, wherever that was. I mean, I remember the NQ got to 5,000. It was a big deal. If any of you remember that. December's your statistics. Where are you generating your homework statistics from? What tool you're using for that? So let's just watch. Now, guys, you do not need to be trading this. You could just be in park. It doesn't matter. If you're like all about, I don't want to miss it, I don't want to miss it, meet FOMO. That'll take you out of the business. Our high volume, this is a location right here. So we came back and tested it. Remember, I said to you, I missed it. Well, this one, we're not missing, are we? And full session VWAP. There is alignment. Now, this may not have much traction. I don't know. Not my job. We might only rotate and come back. So this is an aggressive trade. There is a trigger. It's right there. But you might only come out here. So I have certain preferences for trades. And I tend to trade larger rotations. And it's, for me, it's not about action. It's about risk reward. And my stops tend to run around 3 points. I can go a little wider if I choose to. It's my prerogative, or less if I can, you know, enter well. For me, entry and then obstacle are the key pieces. How can I get risk neutral? Well, if I get short in here, stop is going to be here. I've got to get risk neutral. I got to cover my risk. Then it's just trade management. And where am I trying to go? Ultimately, here and then out the bottom. That's the trade. And I've been talking about that. And it doesn't matter. Now, let's say this doesn't fit your trade plan. How about this? So what? Now, if you're feeling this FOMO thing, now, oh, I got to get in, That'll take you out of the business. You need a detachment, because you need not to get myopic and think this is the only trade that you're going to have in your life. If you actually sustain a career, there's going to be thousands and thousands of trades. I mean, it gets to be mind-boggling. I couldn't even tell you how many trades I've taken over 45 years, but I have to think it's a pretty large number. So does one trade mean anything? No. It isn't about the trade. The trade is only where it's vetted and where it shows up. And it's certainly not about this rotation. They're random. So if it doesn't show up at a location, there's a location that you have vetted, then there's no trade. It's as simple as that. You just go, well, that's interesting. Take a screenshot, annotate it, and put the pieces together. And you need to understand that it could just as well be here. And I would prefer, personally, this. But that doesn't mean anything. If I take this trade, I have to be conscious that it's a mean reversion trade, and I got to manage the trade. That's it. Does that make sense, guys? Yeah, December, I can't answer your question on why your numbers are different. But you might want to go to Investor RT and go to their website and check out their homework video on there on how to do it, if you haven't. And just make sure you're using the right number of days and that you're using only the RTH session. Then you'll get your numbers like mine. If you're not using daily RTH, if you're using 30-minute RTHs or however you're breaking up days, it's not going to work. So make sure you got it set up properly. And if that doesn't solve it for you, then put in a ticket, and I'm sure they'll help you out. Got about 8 minutes left. You got any final questions? Throw them in the hopper. And if you want more of what you see here and you want to understand the business of trading, developing a trade plan, understanding that this is a business of probabilities and statistics, not of how you feel and your FOMO and your adrenaline and your dopamine fix and your fear. All of those things need to be managed and understood. And the way to get there potentially is by understanding the business you're in, developing a trade plan, and sticking to it. Because the end result of having an edge is the same potential result as a casino. And that is extracting dollars in a random distribution of outcomes over a large sample size of interactions over time. It's not the last trade. It's not this trade. It's all the trades and having a statistical edge. In between, you got to deal with how you feel, your fear, and not knowing what's going to happen next. The triggering of your fear may be, and I call that hide, remember, fear, looking for certainty, is the result of being human. You cannot stop being human, but you can intervene with your primal reptilian brain's response to uncertainty. And the way you do that is by statistics, because you've taken something nebulous, which is this, and you've made it tangible with probabilities and statistics. If that makes sense to you, then use the link in the bottom of YouTube and come over to Trader Lab. There's no cost. And I don't know how long that'll continue. Trader Lab's been going now for about 3 years. Our senior trader has over 50 years experience. I think 54. I'm not sure. We'll have to check in with him. And I've got 45 years, both professionally and otherwise. And we have the full range of traders in the Trader Lab, from really newbies on up to seasoned traders, and everything in between, and all kinds of methodology. There's not a right or wrong. It's a statistical edge, and it doesn't matter how you get it. If the magic 8 ball did the job, In fact, on the trade desk, when I was sitting on the desk, we had a magic 8 ball. So, and that didn't work so well either, because sometimes you'd ask it, should I be long or short? And what does it say? Ask again. I go, great. And, and of course, the problem with the magic 8 ball was that somebody wouldn't grab it and throw it at somebody. And we also kept spare keyboards in the utility closet because they would get smashed occasionally. There's a lot of stress in this business. But I worked with a lot of traders over the years, and I was fortunate to be able to coach a lot of them. And when we were on the trade desk, it was serious only. And if someone didn't do their work or didn't participate, they were invited to leave. This is a business, and you really need to approach it like a business. It's not a video game. I think everybody has the potential, and I believe anybody can learn how to trade if they do the work and, if they come to Trader Lab. Whether or not you succeed is going to be on you, because you're going to be challenged beyond your imagination because you have landed on Mars. The rules or the processes that work in the real world, if you will, in your outside life, you bring them here, but they don't apply here. In fact, they're obstacles to participating and sustaining yourself in this environment. You might as well have just landed on Mars because it's different. And you're going to try to fit this into what you know, but this business is not what you know. It is gaming. And unless you've owned a casino and sat on the house side of the table, you do not know the business you're in. You're in a gaming business, and it only works for the casinos because they only play games that have an edge. Structured trades are like games that have a statistical edge. If you're interested in learning about trading, the business, and potentially developing a career path, that's what the Trader Lab is built on. And it doesn't mean you'll be successful. Many traders who want to be in this business don't really have the determination and discipline to go through the learning curve. And it is a learning curve. But the outcome, assuming you do it, is really a terrific potential. That's all I can say. You have your own hours, potentially. You don't need to trade all day. You just do your thing. And if you have an edge and you have the discipline to actually execute it, no matter what happens in the market, no matter what trades don't fit, and then you see rotations, which triggers FOMO, over time, just like the casinos, you have the opportunity to extract dollars. As you guys know, last year I was trading and streaming from Italy, Costa Rica for a couple of months. In fact, in I think a week or two, I'm going back to Costa Rica to trade for another month. It's, all I can tell you is this is a portable business. You can go anywhere with it as long as you have an internet connection. And why not you? That's all I can say. Why not you? If you're interested, come to Trader Lab. As I said, I don't know how long it'll be available. It's not up to me. Bookmap has made this available. It's a full-time community. It is global. There's no cost. And I'm going to say, I don't know if you've been in chats and paid all kinds of dollars, and what do you have for it? Well, here's an opportunity for you. And again, up to you. But you have my personal invitation and the invitation of all the other Trader Lab participants to visit the Trader Lab and see if you can improve your journey. By the way, this stream will be available. I'm going to come up with a name for it and post it so it'll be out there in the public. If you're interested, be sure to watch the streams. I think the best thing, and my invitation to you, is come to the Bookmap Discord Trader Lab community. There is no cost. Visit Trader Lab, introduce yourself. There's the community, the library of webinars, and it's available to all of you at no cost. Please hit the like on the way out. Thanks for visiting Trader Lab, and I look forward to seeing you tomorrow.